an explanation and a sample of applying the business cycle model concept to fundamental data in the economy and news. I apply it to price only, but what I find is some of those same price fluctuations, types of fluctuations, show up in the economy and business data, and I'll explain some history of how I discovered that in a moment. But let's look at this. This is the latest housing starts hit 5-month high in December. This was on a Bloomberg.com site. And I just wanted to show you right here is what's called a level 2 fluctuation. It's how we do quarterly business. And there's another one, and another that didn't work so well. If you put that on a rate of change basis, you could see the rate of change would have dipped a lot more, showing you there was something there. All right, and then there's another one and so forth. Now, level 2s build into level 1s. So this fluctuation right in here is a level 1. All of this fluctuation is a level 1, so on and so forth. All right, so just wanted to show you that real time here on that chart. Now I'm going to show you a snapshot of that with labels. Okay, so what I've done is showing one level 2 fluctuation right there and called it a number 2, okay? And I call them levels and degrees of importance, okay, and duration. All right, so there was another level 2 right there, but it completed a larger level 1. It's like semi-annual business, okay? Then there's a level 1, there's a level 1, and I'm showing only the business cycle bottoms. We also have business cycle tops, okay? There's a level 1, another level 1, and some are short, and some of them are lengthy, and some of them very volatile, crazy, or up a lot or down a lot. There's a lot of variability to this, which is why standard economists and analysts, market analysts and traders, investors miss these things, because standard statistics is too rigid. It needs to be more fluid. You need overlapping performances. You need to allow for fuzziness. People are correct for saying markets are a fuzzy logic system. Well, the same thing for the economy, people, this universe. There is no precision or perfection. Get over it, okay? In addition, people will look at fundamentals and say, well, really, they seem to explain 20 to 80% of price fluctuation. Very variable, and they're correct. And you might think, well, that's useless. So that's why some people only look at price charts and train their computers to buy and sell off of just price charts prices, okay? They don't follow the news and information because they think it's just too difficult to work with. Others look for combinations of price studies and the fundamental news, and then still others stay with just the fundamentals and assume there is a connection to price. Well, it turns out there's something called X fundamentals. I came up with that myself. And it's really more about the machine, the marketplace, the people, and the money, and it explains 80 to 20%. So you add 20 to 80 to 80-20. In theory, you get to the complete picture, the whole picture, 100% explanation. Well, it is more difficult than that and fuzzy at times, but it shows the reason standard fundamentals don't work is people are going to do their own thing at times. And so with the economy, and we also get irrational at times and emotional in terms of how we're trading and investing. All right, so the model looks at all of that, puts it in a basket to come up with these signals. But on that fundamental side, what I don't explain well enough to some people is that we label fluctuations in fundamental data whenever we can. And what we have is there's such a thing called a kitchen business cycle that inside of it, we have the level 1s and the level 2s. And this is monthly data, but if you have weekly data, you're going to find some level 3s. And if you have intra-week or daily type data, you're going to find level 4s. And when you go to intraday, you're going to level 5 all the way to over level 10. It just explodes and goes crazy, okay? This is monthly data. Now, the kitchen business cycle is discovered by Mr. Kitchen that has to do with business inventory. But we've learned it's in many different business statistics there for the economy, and it's even in market prices, okay? The market works with it. So this was a kitchen business cycle top at the end of 2024. Why did the end of 2024? Because they were nervous over Trump. And look at this, even though it was wild up moves at times, it was mostly just down, and there's your overall trend when they couldn't deal with Trump Maganeconomics. Now, it also on its own was due for a normal setback anyways, but it became a little crazier under the Trump stuff. Now, coming into near the end of 2025, it bottomed for Kitchen and it has run up, so no surprise there. And we'll use level 1, level 2s to help us gauge how things are progressing. But in theory, this data ought to go higher into late 26 on into 27, meaning more housing starts coming, which can be supportive of the economy. And if not, at least a clue of other things in the economy that can help move the economy higher. All right, how did I discover this? Back in the 1980s, for our farm where we sold cattle and we bought grains, I learned of a level 3 monthly buy-sell signal, so I knew when to buy grain for our farm, when was the better time of the month to buy it. I learned that when's the better time of the month to send cattle for sale. And the cattle auctioneer and the feed salesman said they were amazed how well I was doing and were really keeping an eye on me in the sense of how did they want to run their businesses and when was more business coming or less business. Now, years later, I worked for some grain companies and watched how they were buying and selling. They were creating that level 3 pattern. Years later, I did some research for someone using restaurant data, and we could see there was a certain time of month people were at the restaurant more than other. The sales were high, and we learned that when we added other restaurants around the city, people were rotating from restaurant to restaurant. And so this week they might be at restaurant 1, next week they might be restaurant 2. But when you looked at the business of each 1 and 2, they had this intra-month fluctuation, but it was just a little bit different timing for the month. Now, I also learned this even further back in the early 80s to late 70s at college, that I could build that into bigger and bigger patterns. When are they going to buy and sell next 3 or 4 months, 5, 7 months, the year, and then even build it into years, okay? And this business cycle model picks up on these kind of patterns in price only and also in fundamental data and the economy, and I put it together to give us assistance not only in business and our jobs and careers, when's the next decade recession coming and the country's going to crash, but also how to help out day to day, week to week, month to month, year to year of what we can make out of these business cycles. Okay, so it's just fascinating that we do business in different time frames and different layers, and then there's also different businesses and characteristics, and this modeling can blend that together and label all these fluctuations and a lot of this fundamental data. But the interesting thing, it's more thorough and detailed and consistent and with higher accuracy when we apply it to the stock market prices, commodity prices, bond prices, and therefore interest rates, okay? And that's where I launched this service to provide these kind of signals to help anyone from short-term to very long-term. And even if there's only certain things you use of it, it allows you to feel this clock process of how are we going, where are we going during the year, during the month, and how about for the decade. I even have a once-a-decade sell signal when the stock market has always gone down about 20 or 50%. I have a once-a-decade buy signal when the stock market's gone up 100 to 400%. Okay, but we can actually use this in business and make projections of how well business is going to do, and when can we forecast that the most serious, worst, recession per decade that could hit you economic-wise. Thank you.